Good evening. I'm Epstein with your Tuesday evening SPDR ETF stock market wrap-up. And this wrap-up is for Tuesday, as I just said, the 21st of November, 2023. First announcement, I am going to take off tomorrow night. I'm going to leave early tomorrow afternoon and head out to where my family is, my wife's family, and we'll be spending Thanksgiving there. But I'll be back on Friday. It's Indiana, so it's from Chicago. It's not even an hour drive. But if I don't go, there'll be all kinds of problems. They don't want me to come in at night. And if I do these updates, it's going to be later evening. And that doesn't fly, and I don't need the problem. You understand? You've all been with me, male and female. You've all been there. So as much as I'm a workaholic, that's what I will do. It'll be back to normal on Friday. I'll either put this out Friday night or Saturday. I'm going to try to do these Friday nights, so we'll see what happens, and they'll be your weekly version. Now, a lot has happened. Today we had NVIDIA come out, and while it was down, it lost a bit more ground after the earnings came out, and it wouldn't matter what they earned. I think people just wanted to grab some money off the table. The stock did go up to an all-time high earlier and has given something back. I don't think anything's changed, and they said it the way that I thought they would. Whatever business they're going to lose from China, and it's going to be substantial in the fourth quarter. Substantial. They're going to replace elsewhere. People want these chips. They can't make enough of them to satisfy demand. So what's the number for the stock? Nobody knows. I mean, do you put a 200 PE on it? I don't know. People just want to own it, and I don't know that there's a wrong number if you're at the beginning of something you've never seen before, and that's where you're at. I was watching an interview with the CEO of Hewlett-Packard this afternoon, and he was explaining what AI means for their computers and how simple it's going to be, that the tasks we type away to get things done, now you're going to say, hey, do a compilation of this for me, just the way I'm talking to you, and it's going to do it. When? He thinks this year, coming up, 2024. He said those steps will be available now. So AI is fast, it's coming. I am using it in building a system right now that if it works the way that I think it's going to work, it'll be another one of the services that I do. And I, of course, as usual, I'll probably put my own money in it, and away I go with that as well. And we'll be testing it first to be certain as to what we've got. But we're doing that all with AI already, and I think you'll find it fascinating. It will be expensive. So it's not going to be my normal $15 a month. You're going to be dealing in hundreds, all right? Because it's got to put out text and emails all day long on the positions that we're doing. It's basically, I'm not going to go into it yet, but I already know what it has to do and the amount of computers I have to put together to do it and to get things out to the client. And for a certain type of client, I think it's their dream. For others, they don't need it. All right. So we then saw the retailers coming out, and they're not doing well. Yeah, you get one or two that do, you know, the Dick's and Zara, the clothing line, but most are not. And there's warning signs from Lowe's and Nordstrom's and all the others. They're prepping you, and they should, because if they say bad things now, and Christmas ends up better. Now, remember what I just said, because this is how it works in this business. And it comes out better, they're heroes. The CEO can walk around. Yeah, we did way better than we thought. It's phenomenal, and the stock gets a pop after that. If not, he's given the market fair warning. It's a no-lose proposition for them. And that is why you do things like that. It's like NVIDIA. Whatever they said, it won't be enough. It's that simple. All right. Amazon down a bit today in front of the Black Friday. We'll see what it does when Black Friday and Cyber Monday roll around. Netflix still looking pretty good here. Tesla up $5. It's interesting that Kathy Woods can't keep up with that right now, but she's no longer in the $33 mark. Her stock is now sitting in the 43. So she's made back 25, 30%. She's had to have come off her lows in an impressive way this year. Most of the cars got hurt. Rivian especially down $1.21. Not a surprise to me. Okay, I think they're just going to have to play around. For AMC, the movie theater, I don't know if you know, they cracked back under $7. Did I not warn you? Right here. And I said, anything over 10, you don't want to own it. The strike hurt them. They're not going to have blockbuster movies for Christmas. They got to count on the Beyonce concert, and that, like Taylor Swift, it'll be good. You can count on it, but it doesn't make up for several blockbuster movies, and they're not going to get those. Napoleon might be the biggest of the season. We'll have to wait and see what it turns out to be. Does it get panned, or is it going to be considered great? I know I saw the trailers. I loved it. So, Zoom. Well, so much for Zoom. This is a pretty big move today. I mean, is it because of the thinness in the market? It could be. But it is a big move, and it's an outside day to the downside, which breaks the pattern of the higher low, higher high. So at a minimum, it's a pause or the end of a move. What proves that that may not be the case? Because if you've taken my outside day course, you know that. Well, wait a minute. Instead of me explain it, okay, my outside day course will be one of the cyber items that you're going to get an email on if you're on my mailing list because you've gone to the website and signed up for our free offers in any manner. Why don't you let me send that to you on Friday and you then learn? But you can see higher high, lower low, and where did the market go? Didn't quite make it up to these moving averages, but it most certainly got to the Bollinger Band, and staying over that band's only 5% of the time. Now, you're also overbought. So while you might have been buying in your exuberance, I'd be saying, listen, you're overbought, you're at a Bollinger Band. I teach you don't buy Bollinger Bands, number one. And as a filter, you're overbought. Why are you buying an overbought condition? Rivian, sideways choppy action. Exactly what you should expect to make a bottom. Uh-oh. A bottom? I could be right. You've come down enough where unless they're not able to produce and get things going, this churning action now should be met, if I'm right, by the market eventually coming out to the top side. I'm very wrong if you come out and stay under the downside, and I'll have to recalculate what I'm doing. Does it mean it's a buy now to me? No. It's what I expect, but not what I act on. UGA, not too far away from that. Notice the sideways action now in the gasoline fund. I'm not seeing anything really to do here. The market has rallied back and it is fighting at the 200-day average and the 18. But why do you want to be long or short going into the November 26th OPEC meeting? I don't think you do. For my money, you stay away from those things because you never know what they're going to say, let alone what the market reaction is going to be to what they say. When we come to XLF, you have an embedded reading. What it tells me is the breaks in the market should be shallow, not huge, not carrying down here, unless the red line closes under 79. It's nowhere near it. The number's at 96. So I'm looking at breaks in the market where the pros are going to step in and try to buy it. In XLI, same thing. Embedded reading tells me that the breaks are going to be shallow. But I don't like when you come in and you're right against that 100-day average and you're buying for the first time as it gets over it. I walk away from those type of trades. Walmart, was this enough? It might be. It's down to the 200-day average, just missed it by 11 cents, 154.02, got to 154.13, as you can see, and had an outside day to the upside. There's big gaps in the chart. They're not going to be filled right away. You can count on that. But maybe the market's overdone. If it is, the first resistance should be the 160.31, the 100-day average. If you take out today's low, I'm not quite certain where you're going. Then you're back under the Bollinger Band and an outside day up. Again, that's in my cyber course. We'll wait on that. RSPD didn't even have the power to make it all the way up here. So the consumer, all we hear about is how weak they are. We're hearing about how they're not buying, they're moving to generic. Why isn't this chart breaking instead of staying with a bullish embedded reading, and it is still in a buy configuration? It comes out of it when the red line is under 79. Until then, it's not. The market betters The investors are not agreeing with what the analysts are saying. In the home builders, well, you know there's going to be demand galore for these guys. I seriously doubt you're going back here. Now the question is, are we too high? And you might be. I mean, you've come from 69 all the way up for all purposes here to the 82 level. It might have to correct, but I think your good support's going to come in at the 100-day average at 79.10. In XLE, I wouldn't touch the energies. This chart is bearish, lower highs, lower low, momentum up, but I don't know what to do with OPEC. In the gold market, I think you got close enough today in the GLD that I don't mind telling you. I told my clients to buy it yesterday. In fact, I can prove everything I'm saying, written updates and in videos for my subscriber. And today, on this pop, I said, got to take half your money off table. Then I had them put a stop under the early morning low. They got stopped out, but they're ahead from where they got. They made several dollars. C'est la vie. Does every trade win? Absolutely not. I had a loser also of about $2 recently. Dead wrong on one of the trades. Okay, that happens. I expect it, okay? It's reality. Nobody walks on water trading. I'm sure that you think they do. I get these people, I crack up, they go on your websites and they put down, have you followed Mary Poppins? She's making me $50,000 a week. Guys, you should just join in. Do you believe that? Do you believe it for 1 minute? If you do, you should join Mary Poppins. Follow those people. I take them off as fast as I can, and I wish the government and I wish YouTube and other services would stop these people, okay? It's lies. You know it's a lie. I know it's a lie, and if you lose money with that guy because you went to him, shame on you, not shame on the guy. He lured you in. Terrible. Just use your head. Higher lows, higher highs, nah. You got up to the upper band, you're overbought. I think the pros are coming out there. Same in copper. And I'm a bull on copper long term, but this is not where I do anything except tell clients, cash in a bit. Codelco today announced they're putting in just shy of $1 billion into one of their oldest mines. It's huge reserves, and they're going to upgrade it so they can get more copper out. Copper's operating at a huge yearly deficit. If and when, and two parts to it, if, I don't know, but the when is the other part of the question, interest rates drop enough, the economies are going to come alive again, and we go back into the cycle. Everybody's going to want to buy a home again, blah, blah, blah. They'll be tired of paying higher rents. Governments will try to prop up the economy by doing what? They'll do road work, they'll do upgrades, and copper's used for all these type of things. It'll come back. Be careful, though. Time is everything. Now, TLT. You know, you're just keeping with lower rates here. There's a theme. It hasn't changed. The Fed minutes didn't change it either. I covered the Fed minutes in detail in tonight's report in my newsletter. And suffice to say, they've got their finger on the trigger, but they want to give the market time, and they want to be, I used the word last night, they were going to use the word careful. They do. Wait till you read the report. And I knew they had to because I heard Chair Powell using it so much. And that's what they want to be. They want to give the market the leeway to, on its own, let gravity pull it down. Let employment not be so strong. Did you see how many people are being employed for the retail season? It's down dramatically. My wife has been in retail the whole time I know her with a major company. And they have hired, instead of the normal 20 part-timers or more, 3. And this is a huge jewelry operation. If you're in a big city, I promise it's there, and it's one of the top names. And 3. So problems happening. Louis Vuitton bought them. Higher high, higher low. Then you take a look at UUP, slipping away to the downside through here. You can see how the market is coming down. It's oversold. Okay. And then FXE. Outside day, right up at the top there. What does that mean? Take advantage of it on Friday when you see my emails. Cyber Week is here. Take advantage. The offers are great that I'm making you. Got it? Going to be that simple. So you put it all together, you got that. And for the free offer today, again, just go to our website, iraepstein.com. Under free offers, you'll see a page that shows like this. There'll be a lot more offers on it. I'm just static right here. You go in, you choose by clicking on the blue area, what do you want? It goes into a cart. Under this, there's an area that you go to, and you put in your name, your email. We email everything to you. Take advantage. The holidays are here. You're going to have some spare time. Read, see some of these samples come to you. I think you're going to like what you see. Again, move your cursor up there. It's the easiest way. It'll take you right there. Give it a click, or iraepstein.com. I'll see you all Friday, hopefully. Remember, I'm not going to be putting out any of these tomorrow night, so you have a great Thanksgiving, and I'll see you all Friday. Take care.